Good evening, Council and Mayor. This evening we have Andy here from Abdo. He'll be doing an audit presentation on our 2021 financial statements.
Thank you. So what I'll do today is go through the audit presentation, which will summarize the results of the 2021 audit. Feel free to ask questions as I'm going through it. That's kind of why we do it at a work session. So any discussion you would like, definitely feel free to interrupt me as we're going through it. So if you flip to the next slide. So what I'll cover today is...
1 second. Yeah, we gotta...
Okay.
Okay, we're going to call the Montrose City Council workshop to order Monday, June 13th, 6 p.m. Roll call.
Sam Solars.
Nicole Andrioff.
Kirby Moyna.
Jessica Bonniwell.
Michael Sommerfeld.
Now you're good to go.
All right, thank you. So what I'll go over today is what our audit opinion is, so really what you're hiring us for. We'll look at the general fund results, fund balance, budget to actual, and some revenue and expenditure trends. And then look at your other governmental funds, so your special revenue, capital project, debt service funds, and then move on to your enterprise funds, so water, sewer, wastewater, plant, looking at some cash flows from operations and any cash balance, and then end with some key performance indicators, giving you a comparison to other cities within your county and throughout the state as similar population. So the end result of our audit is that we issue an opinion on your financial statements. We issued an unmodified or clean opinion, so the best opinion you can get. On the next slide, we'll see 2 findings that we report. We'll talk about those next, but we also issue a report of Minnesota legal compliance, where we test for, up to 7 different areas that the state auditor puts out, anywhere from cash and investments to debt to contracting and bidding. A clean report there, so no findings to report. So on the next slide, the 2 internal control findings that we do have are very common with small to medium-sized organizations. We talked about them last year. The first one, preparation of financial statements. We're performing the audit and preparing the financial statements. Like I mentioned, very common. Important from a council perspective to be aware of it and pay close attention to the financial information. The second one there is limited segregation of duties, basically with Michael doing now all the accounting functions. You do have some controls in place with the utility billing clerk and the city administrator doing some review in the finance committee, but the detail work is really being done primarily by one person. So again, just to be important, pay attention throughout the year, see questions, ask questions if anything looks unusual. All right, so we'll jump into the financial information. So here we're giving you a 5-year history of your ending general fund balance, which is indicated by the orange line. We compare that to the next year's budget, indicated by the yellow line, and then we give you your fund balance policy too by the black line. So a couple items to point out here. Your fund balance policy is at a minimum of 40%, so you're in compliance with that policy over the 5 years presented. Total fund balance did increase in 2021, and it has each of the 5 years presented. At the end of 2021, you're about 132% of your 2022 budget. So maintaining that general fund balance is important due to the timing of your revenue sources. So your main revenue is your property tax levy and your local government aid, which come in about halfway through the year. They come in 2 installments. So that's where that policy of you don't want to be below that 40% because your expenditures are incurred more evenly throughout the year, so you need that ending fund balance to meet those needs. So on the next slide here, we give you a budget to actual. So we have your original and final budget, your actual amounts, and then the variance with the budget. So your total revenues came in just over 1.2 million, final budget at just over $1 million. The largest variance there were related to permits, so development-related activity, and then also a write-off of some landscape escrows. So that some of that was cleaned up. Council approved it throughout the year. That was about 80,000 of that variance. Expenditures came in under budget, so total expenditures at about 890,000 compared to budget about just over 1 million, so $130,000 variance. The biggest variance was in the Public Works Department, capital outlay, and then also within the operations too. You did transfer out $230,000 to fund the Highway 25 improvement project and close that fund out during the year. So total fund balance increased about 113, ending at just over 1.7 million. So now looking at some trends of your revenue sources, we give you a 3-year picture here with 2019 being orange, 2020 yellow, and 2021 black. So that your main revenue source is your property taxes. You can see, as we saw with your budget increasing each of the past 5 years, that property tax revenue has also increased. The licenses and permits, the next column over, had some fluctuation. That really depends on the development activity in the city. So you can see from 2019 to 2020, a little drop, and then an increase in that activity in 2021. The intergovernmental revenue, that the big piece there is local government aid, but the bigger swing you see in 2020 is the CARES funding, COVID funding. So that was a one-time source. You are receiving American Rescue Plan funds. You did receive your first half in 2021. You'll receive your second half here shortly. And then that other category, that's really the increase in 2021 is that write-off of the escrow and getting that into the general fund. Similar on the next slide, but with your expenditures. Really just a general increase in expenditures similar to what we saw for the budget. The highest area spending is public safety. The jump in 2020, the yellow bar, is again related to that CARES funding. So the COVID funding got, the related expenses got coded to public safety. And then that third column, or the fourth column, the other, the increase in 2021, the black bar going up is that $230,000 transfer to the Highway 25 Improvement Fund. So now moving into your special revenue funds, you do have 5 different funds here. We give you a comparison of ending fund balance from 2021 to 2020, and also give you a breakdown of how that fund balance is classified. So total of all the funds ended at about 2.4 million, an increase of 337,000. You have your fire special fund, which increased to 130,000. The majority of that is combined and assigned, or committed and assigned fund balance, so internally designated. The park and recreation increased about 158,000. Again, internally committed for those specific purposes. Your small cities fund, really a small balance there, just under 9,000, remained the same, really no activity. That's restricted for specific purposes. You have your EDA, which increased 43,000. Again, that's restricted money for the EDA activities. And then your community center, which remained about the same, a small increase up to 87,000. So we do give you a graph there that breaks down the restricted, committed, and assigned. Again, the restricted is really outside restrictions, and then the committed and assigned are internally designated. Now moving on to your capital project funds. Here you have 5 different funds. The one we talked about being closed, the Highway 25 improvements. You can see that at a deficit at the end of 2020, and as that project completed, you made that transfer in about $230,000 to end that. Going back up to the top of that chart, your capital projects, general capital project fund, increased about 545,000, ending at 950,000. That's all internally assigned for future projects. You have your downtown improvement fund, which is, there were bonds issued during the year. So really that increase of the 5.4 million is unspent bond proceeds, which will be utilized as that project, and you're making your pay estimates on the construction project.
What's under the general capital projects? Yeah, that would cause the increase. I was just curious.
So the 544,000 increase is really the local government aid allocation to that fund, and there's also some tax levy that's been allocated to plan for future projects.
Okay.
And then the last one, the 2020 street improvement project, really a project that's still ongoing and has a deficit of about $70,000 at the end of the year. So really the bulk of this, the $5.9 million ending fund balance, is related to the 2021 bond issuance and restricted for that project. Which on this slide, the next slide, the debt service, you'll see the biggest activity here is the issuance of that debt. So about $5.8 million related to the street component, the enterprise fund component. So the water sewer storm is recorded in those funds. So there's an additional about $4.1 million of debt in addition to that $5.8 million, which we'll see. So total governmental fund debt, just under $7 million, with total interest payments, $1.5 million over the life of the bond. We do give you a 10-year schedule there of the future principal and interest payments. Always important to watch the revenue sources so you make your principal and interest payments. So whether it's being paid back by tax levy, special assessments, or other sources. So now moving into the enterprise funds, starting with the water fund. Both these, all the enterprise funds, we give you two graphs. Like I mentioned at the beginning, we give you a cash flow from operation, which is the top, really telling you our utility charges covering our expenses. And then we give you a cash balance graph. So the utility charges or your operating receipts is the orange bar. Your operating costs is the yellow bar. So you can see in all the 4 years presented here, you're covering those costs. You're generating cash flow from operation. Which a big part of that is intended to pay your debt service, your principal and interest, which is indicated by that black bar. So really kind of a break-even cash flow, all things said. So you can see indicated in the graph below with the cash remaining fairly consistent from 2018 to 2020. The big jump in 2021 is the issuance of the bonds and the unspent bond proceeds being sitting in there at year end. And we'll see that for the other enterprise funds too. So the sewer fund on page 13, again here you can see that the utility charges, the orange bar, have covered your cost each of the 4 years presented. Some of that debt did drop off after 2019. We'll see that increase with the new bonds coming up. But again, on the cash flow on the bottom there, the big increase in 2021 is that unspent bond proceeds. The refuge fund, this is the fund where you really change the operation of this. So I believe in 2022 you approved closing this fund, so we won't see any activity in this fund going forward. And then your storm fund, prior to 2021 you didn't have any debt, so going forward we'll see principal and interest payments coming out of this fund. So you have been generating cash flow from operations, indicated by the orange being higher than the yellow bar in the top graph, which the cash did increase each of the years presented. And again, the jump in 21 is due to the bonds being issued in 2021 and not being spent till after that. And then your wastewater treatment fund. Here, looking at that top graph, you'll see in 2020, the cash flow didn't generate sufficient due to higher operating costs, but they did drop back down in 2021. So more of a break even with that, allowing that cash balance to go back up from 2020 to 2021. And then each of these, which I probably should have mentioned at the first one, we do give a target balance there, that black line, which you're above that in all of them. It's really looking at about 50% of your operating costs plus 1 year of debt service coming up. So now this next slide gives you a 3-year picture of your cash and investment balances, broken down by all those fund types that we just talked about. The biggest change here again is related to the debt issuance. So the light green, the top portion of that bar is your enterprise funds, the funds we just covered. A big portion of that increase again is unspent bond proceeds. The dark green is your capital project funds. That increase is also related to that unspent bond proceeds. So that really accounts for that big jump in 2021. So this kind of gives you a picture of the cash and investment balance over a 3-year picture as a city as a whole. So now moving into some of the key performance indicators, again, like I mentioned, we give you a comparison of all the Class 4 cities in the state of Minnesota, which is the orange color. All cities in Wright County, the yellow, and then the city of Montrose, the black line. So the two on this page are tax-related, giving you a tax rate, and then also taxes per capita. So here, the tax rate on the left graph, consistent and a little bit lower than the peer groups with a steady tax rate, no big increases or decreases. Same with the taxes per capita, below both the peer group averages. The next slide has two debt-related graphs looking at your debt per capita and then your debt service expenditures as a percent of total. Here we see an increase in 2021. Really shows you the activity of the bonds that were issued in 2021. So the debt per capita increased. Pending any other bond issuances, I'd see that number dropping down as you're paying that off. A couple expenditure-related KPIs. This is governmental funds, so it doesn't include water, sewer, storm, any of those funds. But really significantly below the peer groups for current expenditures per capita, with really a consistent trend, a little bit going up in 2020, probably partially related to the spending of the CARES or the COVID money received in 2021. Capital expenditures per capita, that's really going to depend on the projects you have going on. So back in 2019, you had some significant projects, and when we look at this next year from now, with the projects going on this year, we'll see that increase in 2022.
How big are Class 4 cities?
Class 4 cities, I believe, go up to 10,000. So 25 to 10,000, I believe. So with that, I would take any questions, comments that you guys may have.
Back to the taxes rate, the tax rates. Even though you just explained what a class 4 city was now, I mean, and some of those cities obviously are around our population, we're still as a city sit pretty well for our tax rate. Am I looking at that right?
Yep, so you're lower than, if you're looking at all the cities through the state with similar population, the class 4, but then all the cities in Wright County, whether they're a 200 population city or the bigger ones, are included in there. Not a per capita, not a ton of variation between the size of cities, as you can see by the two.
Yeah, okay.
Do you think it's a healthy balance of debt and projected debt to fund balances?
I think, I mean, you look at the debt per capita number on the slide 19, it goes up. So I think it's just one indicator, but you got to look at your future plans for projects and the bonding and with your taxes per capita, with that being funded by the principal, some being funded by the levy, you have room to, you know, that when you go up, you're not going to be way above your peer group. You do have some, you know, close to $1 million in your general capital project fund. Your general fund is real healthy at that 130%. So I see that the health of the city strong.
Any other questions? I think that's all the questions we have for you then.
All right, thank you. So at the regular council meeting, like I've done in the previous years, I'll just let them know we went through the presentation at the work session and really just take like 30 seconds to give our audit opinion and the opinion on the Minnesota legal compliance, and
Perfect.
that'll be about it.
Yeah, thank you.
Yep.